Welcome to the channel. Today is August 5th, 2024. Thank you for tuning in. As we can see, the market is down pretty significantly again today, and it bounced back from earlier this morning. The S&P is down 170 points, Nasdaq down 656 points, Dow down over 1,000. One of the big concerns is the VIX. The VIX is still spiking. It was over 40 today, so that means volatility it came down some. It is at 35.99. I believe right now that we are in a global economic crisis. As we can read on here, the market sold off extended around the world with the US index sliding and volatility spiking. All three major indexes fell more than 2.5%, to include the Nasdaq. Turbulence started in Japan, where the Nikkei fell 12%. 12% in one day. And the Nikkei is now in bear market. I don't know if that's going to go on in America, but that is very, very concerning. And we've been talking about this now for 2 weeks. We believe that a lot of this is caused by the 10-year yield, which is not falling as much. It's only down to 3.78%. And the bond market is doing the work for the Fed. The Fed didn't cut last week, which a lot of people are speculating they should have to stop this turbulence. Some people saying they're not going to do an emergency cut. But to put this into perspective, it's really not as bad as it appears. The S&P for the year, all major indexes is still up for the year. So that makes it not that bad. I mean, the Nasdaq is down in bear territory, basically means it's down over 10%, or in correction territory, excuse me, but it's not in bear territory. Bear territory is 20%. So, and like I said, I've been talking about this for 2 weeks now, and I ain't saying that because I'm right, but as we're going through this now, and it's now better time to prepare. It's now a better time to prepare. So what should we do? Depending on your financial situation, if you're in stocks, at this point, I sold off some of my positions, but some of my core positions, Meta, Google, Amazon, Berkshire Hathaway, BlackRock, I'm just going to hold on to them. And if it keeps going down more and more, which I actually hope they do, because like Warren Buffett says, you should don't buy your stocks the way you buy your perfume, buy the stocks the way you buy your groceries. So that's basically saying if you go in to the store one day and steaks are selling for $25, if you go in the next day and they're selling for $15, you're going to be happy. So that's all that's going on here. All you got to do is believe in the American system, believe in the market as we go through this. And I say that, and I believe we have a long way to go still. I really wouldn't be surprised if the market is down for the year this year. I wouldn't be surprised if we go into bear market territory of 20%. I really wouldn't be surprised. It wouldn't shock me at all. Because everything is overvalued right now. Stocks are still overvalued at this price. We've been talking about the housing market. Still overpriced at this price. It's coming down. I mean, as interest rates go down, that means home loan prices are going to go down. So that could be helpful. But as we talked about, we believe this go around the housing market is going to defy logic. We believe that the housing market is going to decline as interest rates fall. Because one of the main reasons that the housing prices went up is because there was a shortage of inventory. But as interest rates go down, we believe more and more people will start listing their house. And as you get more supply to the market, supply and demand comes into play, and prices will fall, we believe. I don't think I'm wrong about that. I'm pretty certain that I'm right. I don't know how far the stock market is going to fall because I'm not a predictor. I don't know what's going to go on in the future. But what I'm going to do is I'm going to buy value companies when they come down in price, like Meta. Let's use Meta for an example. Microsoft and Apple is completely overvalued. Completely overvalued. I can see them falling 30, 40% just to come within value. They're not growing nowhere near at the pace of Meta. Meta's all the way down to like a forward 19 PE. That's pretty cheap. That's pretty cheap. And they're growing their earnings rapidly. So that's what we're going to do. And so I wanted to come on today to be a little bit more encouraging as I've been in the past. And you should take advantage of this. I still think it's too early, but you should take advantage of this. Be excited when the market comes down. If you ever read The Intelligent Investor, you will know that Mr. Market, sometimes he's a little too excited, sometimes he's not so excited. And right now we're in one of them stages that Mr. Market is not so excited. But it's still way too early for me. Way too early. I'm really hoping a company that I love, Meta. I love Meta. But I wouldn't mind picking up some shares of Meta at 200. And it's about 450 right now, and I wouldn't mind picking up some shares at 200. Matter of fact, if it comes to 200, I'm going to be jumping for joy. I'm going to make a video that day because I'm going to be real, real excited. Meta is an amazing company, growing their earnings rapidly. People love social media. We ain't even talking about putting AI. Once AI really gets involved and they get it throughout their whole corporation, AI is going to lower costs for Meta. They're going to bring new products to market, like their Meta glasses. They said they barely can keep them on the shelf. They flying off the shelf. I'm going to get me a pair real soon. I'm excited about the Meta glasses. So what we do in these times is we stay calm. We stay calm. We think logically. We think rationally. We don't panic. We can't panic. We be prepared to take advantage of when Mr. Market is losing his mind. And I don't really think he's losing his mind right now. Mr. Market was just too excited, had all type of assets overpriced. But I will tell you one concern that I really have. When something like this normally happens, when we down this much 3 days in a row, but I believe a lot more to go, we may get a bounce back. If we do get a nice little bounce back, you might want to consider selling off some of your shares because we going down. Normally triggered for a reason. Something normally triggers this market to go down, and we haven't had anything triggered. Sometimes it's a bank failure. Sometimes it's a major company failure. It could be the trigger is these interest rates falling from 5%, the 10-year yield, 5% all the way down to 3.78. The bond traders out there doing the work for the Fed. So my message today is to stay calm. I still got lots of money in T-bills. I ain't sold a T-bill yet. My T-bill is making 5%. And as I talked about, I thought the best investment was a T-bill. I thought I really, when the 10-year yield was at 10%, that's what I really should have been buying. I blew that. So that means I would have had 10 years to earn 5% until I can go through this whole thing. I don't know if it's going to last a month, 2 months, a year, 2 years, but I would have been locked in. So I blew that. But I do have T-bills. I'm going to keep buying T-bills. So if you got a little bit of money on the sideline, a little bit of cash, put some money in T-bills. Even though I think this is going to last more than 3 months, I don't know. But we need something to trigger. I don't know if the Fed, if they come in and do an emergency cut, will it fall in? I don't know. I don't know. But you have to put your money in something safe as we ride through this turbulence. And if you haven't sold yet, don't panic, don't sell. If you got good companies at good prices, that's not heavily in debt, it's going to be okay. Just be prepared to add to your positions as this market come down. I hope this information was helpful. If it was, please share, please like, please subscribe. Good luck investing.